In today's video, we'll do a detailed comparison between two flexi-cap funds, which are quite popular in the market due to their own unique properties. These funds are Quant Flexi Fund, which is popular due to its unique way of investing, and Parag Parikh Flexi Fund, which is popular due to its unique portfolio allocation and having one of the highest AUM in its category, and also try to understand who should invest in which fund. So please watch the video till the end. Hello everyone, I am Dhaval and welcome to my channel DIY Finance. So let's start the video with the basic details. Firstly, for Quant Flexi Fund, the AUM, that is the total asset under management, which is around 3,500 crores, which is quite low for a flexi cap fund. The expense ratio is 0.77%, which is little higher when compared to average expense ratio for flexi cap schemes. The benchmark index, that is the reference against which the scheme is compared, is Nifty 500 TRI. Now let's look at the basic details for Parag Parikh Flexi Fund. Here, the AUM is more than 55,000 crores, which is one of the highest for a flexi cap fund. The expense ratio is 0.58%, which is below the average expense ratio for flexi cap funds. The benchmark index is Nifty 500 TRI. Now let's look at the sector-wise allocation. Firstly, for Quant Flexi Fund, from the table, it is very clear that the fund has the highest allocation to energy sector, followed by finance, healthcare, and metals. Now let's look for Parag Parikh Flexi Fund. Here, the highest allocation is to the financial sector, followed by services and technology. And when we compare this allocation to the category, it is quite different for both the funds. Now let's check the portfolio allocation. Firstly, for Quant Flexi Fund, as evident, large cap shares form around 51% of the portfolio, whereas mid cap shares form other 39% of the portfolio, and rest around 10% is allocated to small cap stocks. The portfolio looks quite proportionate with weightage given to all the three caps. There are only 50 stocks in the portfolio, with top 10 stocks contributing to 43% of the portfolio, and top 3 sectors form around 57% of the portfolio, making the portfolio little concentrated. The portfolio turnover is whopping 364%, which is very high, but it is obvious for this fund as it has the strategy of changing funds very often. Now let's look at portfolio allocation for Parag Parikh Flexi Fund. Here, around 88% is allocated to large cap stocks, whereas mid cap stocks form around 11% of the portfolio and rest 1% is allocated to small cap stocks. This makes the portfolio large cap heavy. The portfolio seems not so diversified as the portfolio is having 48 stocks, with top 10 stocks contributing to around 53% of the portfolio, whereas top 3 sectors contribute to around 57% of the portfolio. Here, the turnover ratio is only 4.3%, as the funds follows a buy and hold strategy, which is very different from the strategy followed by Quant. Now let's look at the top holdings. Firstly, for Quant Flexi Fund, as evident, Reliance Industries and Adani Power are the major stocks of energy sector, whereas Hudco and Geo Financial are the main stocks of the financial sector. National Aluminium, Hindalco, and ASAIL are the main stocks of the metal sector. Here, one thing should be noted that too much importance should not be given to the stocks in the portfolio of Quant Fund, as they have a tendency of changing the stocks frequently, and it is quite possible that in my next review, there would be all new stocks in the top holdings. Now let's look for Parag Parikh Flexi Fund. Here, HDFC Bank, Bajaj Holdings, ICICI Bank, and Axis Bank are the main stocks of the financial sector, whereas HCL and Microsoft are the main stocks of the technology sector. Google, Meta, that is Facebook, and Amazon are the main stocks of the service sector. The inclusion of US stocks in its portfolio makes this Flexi Fund different from other Flexi funds. Now let's also look at the fund manager. Firstly, for Quant Flexi Fund, Mr. Sanjeev Sharma has been managing the fund since October of 2019, that is, since last almost 5 years, and that too quite efficiently. Now let's look for Parag Parikh Flexi Fund. Here, Mr. Rajiv Thakkar has been managing the scheme from May of 2013, that is, almost from the inception of the scheme. Hence, we can say that both the funds are having the same fund managers since quite long time, which is quite positive and an advantage for the scheme. Now let's look for the trailing returns. Firstly, for Quant Flexi Cap Fund. Here, we'll consider data of 5 years and less only for both the funds for comparison because in mid of 2018, Quant took over the fund house from Escorts and after that only they have been managing these funds. Here, if you consider short term as well as long term returns, it easily beats its benchmark and the category, and that too with a good margin for the entire range, which is quite positive for a fund. Now let's check the trailing returns for Parag Parikh Flexi Cap Fund. Here also, the fund is able to beat its category and benchmark for the entire period. But when we compare the performance of these two funds, Quant Flexi Cap Fund's performance has been better than Parag Parikh Flexi Cap Fund for the entire time frame, which makes Quant a clear winner on the performance fund. But as I have always said, the trailing returns data never gives a full clear picture of the fund's performance. So now let's check calendar returns for both these funds. Firstly, for Quant Flexi Cap Fund. Here we have data from 2018 to 2023 and also till date for this year. That is 7 years data. Here, if you observe, the fund is able to beat its benchmark and the category 5 times out of the 7 years, which clearly makes the fund quite consistent in its performance. Now let's look for Parag Parikh Flexi Cap Fund. Here, it is able to beat its benchmark 6 out of 7 times in the category 4 out of 7 times, which is okay for a fund. Here, both the funds are almost equal in performance. Now let's also check the SIP returns before checking the rolling returns. Here we have taken monthly SIP of 10,000 rupees for 5 years. Hence, the invested amount after 5 years would be 6 lakhs. Whereas, total corpus of Quant Flexi Cap Fund would be rupees 13,76,000, which translates to 36.28% annualized return. Whereas, for Parag Parikh Flexi Cap Fund, it would be 10,95,000, which is 25.76% annualized returns. Here also, the performance of Quant Flexi Cap Fund is better than that of Parag Parikh Fund. Now let's quickly check the rolling returns. Here, we will check the rolling returns for 1 year, 3 year, and 5 years, and also compare to its index. Firstly, let's see the 1 year rolling returns. From the graph, it is evident that both the funds have been able to beat its index 65% and 86% of times, with Quant having a better average returns but a little higher standard deviation, whereas Parag Parikh is having a better beat ratio. Now let's see for 3 years rolling returns. Here, Quant is able to beat its index 85% of times, whereas Parag Parikh is able to beat 98% of times, with Quant having a little better average returns and a higher volatility. Now let's also check 5-year rolling returns. Here, both the funds are able to beat its index 100% of times, with Quant having a better average returns and a more volatility. Both the funds are having a zero chance of negative returns. Hence, from the rolling returns, it can be concluded that both the funds are having good rolling returns data, but Quant is having higher returns with more volatility, whereas Parag Parikh is having a better beat ratio and is consistent in its performance. Now let's see how the fund performs on risk parameters. Let's firstly look for Quant Flexi Cap Fund. First one, mean returns, that is the average return in a year, which is 33.96, which is more than both the category average and the benchmark. Here, higher the value is better. Second, standard deviation, that is a tool to measure how much the returns have deviated away from the mean return, which in this case is 17.73 and is higher than both the benchmark index and the category average. Here, lower the value is better. Third one, Sharpe ratio, that is a tool to measure the risk adjusted return, which is 1.64, which is more than both the category average and the benchmark index. Here, higher the value is better. Fourth one, beta, that is the volatility of the scheme compared to benchmark, which is 1.05, which is little higher than the category average. Here, lower the value is better. Fifth one, alpha, that is a tool that measures how much better the fund has performed compared to its category. Here, it is 12.26, which is quite higher than the category average. Here, higher the value is better. Now let's see for Parag Parikh Flexi Cap Fund. Here, all the risk parameters are better than the index and the category. But when we compare it with Quant, Quant is having better returns value with more volatility. So now let's see what investors should do. But before concluding this video and suggest what investors should do, I would request all of you that as you have watched the video till now, it seems that the topic is of your interest. Hence, I would request all of you to hit the like button and also subscribe to my channel if you have not done till now to watch such interesting videos in future also. Here, I would like to clarify that this is not a buy or a sell recommendation, and one should take decision by himself or after consulting his or her financial advisor. This video I have made for educational purpose only, and my aim is solely to provide a real insight into funds data. Please do not mistake this as a buy or a sell recommendation. So now coming to the conclusion, what investors should do. First, the existing investors. From all the data we have seen till now, we can say that the performance of both the funds, that is Quant Flexi Cap Fund and Parag Parikh Flexi Cap Fund, is good. And if one is invested in any of these funds, one can stay invested. Both the funds are having a different investment philosophy and a different approach towards investment. Second, new investors. As both the funds are having a good and consistent performance, new investor can select any of this fund, keeping in mind following points. First, as almost all the funds of Quant Fund House are being managed by same fund managers and they all follow the same investment philosophy, hence, if one is holding other funds from Quant Fund House, then instead of Quant Flexi Cap, one should go with Parag Parikh Flexi Cap Fund. Second one, if one is looking for a less volatile fund with a decent performance, then instead of Quant, one can go with Parag Parikh Flexi Cap Fund. But if you are okay with the volatility and looking for a higher return, one can go with Quant Flexi Cap Fund. What do you feel? Do share your views and comments in the comments box. Would love to hear which fund you have in your portfolio and since when. I would like to add that I have Parag Parikh Flexi Cap Fund in my portfolio and will be continuing my investment in this fund. I will again try to review this fund separately after 6 to 7 months and check its performance. So stay tuned to my channel. Please subscribe to my channel if you have not done till now and also press the like button. Do check my older videos. Click the attached cards to watch these videos. Thank you and see you again in my next video.